How can someone figure out how much cover is enough?
Yeah, great question. So we'll focus here just on the life insurance side of things, but typically speaking, when it's just looking at that life insurance or the life cover side, the first things that I would always encourage everybody to do is just to add up your debts. So, add up your mortgage, your car loans, any personal loans or credit cards. That's kind of the first step. The second step you want to think about is any future expenses. So like education costs for the kids, any family costs that we're going to have up until your kids get to a certain age, might be age 18, 20, something like that. Add in any other income replacement that you might need if that person is the breadwinner and or haven't factored in any income replacement. And then you can go ahead and subtract any assets or other cover that you might have from that example, right? So what I've done here, Megan, is I've just presented a few little case studies that I might just have a look at. So a quick example here might be, let's say I've got a mortgage of $750,000, 2 kids, age 5, age 7. So for the kids, I would probably be wanting to ensure that I've got enough education buffer and income buffer to cover their costs up until age 18 or 20. So I might be thinking about $500,000 each worth of cover. So got the $750,000 for the mortgage plus $1 million for the 2 young kids that are going to be covering the school fees and living costs. So then what I'm going to do is I'm going to go ahead and remove my super balance, right? So if I pass away, or this particular case study, if that person passed away, they'd be quite happy to use the $100,000 in their balance, in their super, to help with the financial protection of their family. And also they've got a small amount of life cover there of $150,000. So in this example, the husband may want to look for about $1.5 million worth of cover himself, and the wife may also want to look for about $1.5 million worth of cover. That's really a good starting point. And now you can really go ahead and have a look and see how that fits in on affordability and budget side of things. And then you also may want to consider your TPD, your trauma, and or your income protection. I won't cover those other cover types off in this particular example. I'm just sticking to life insurance. But that could be a way that you would look to give yourself a starting point, is really about thinking through those 3 or 4 key elements before starting and considering that sum insured. In our second example, I've got a mortgage here of $500,000. I've got 2 older kids, so age 12 and 10. And they're also looking to ensure that their kids have got enough funding and living costs up to age 18 or 20. So therefore about $350,000 for each one of the kids. That's totaling around $700,000. Then we're going to go ahead and less the super fund balance. So the super fund balance in this scenario is $150,000. We still got our default life cover of $150,000. So in this example, the husband might be wanting to look at about $900,000 worth of life insurance, and also for the wife, potentially the partner as well. Here again, that's just really a great starting point, and then you can really adjust it based on affordability and budget. And here again, you want to really think through your TPD, trauma, and or income protection needs. So this is a great example on how you may want to work through thinking about the levels of cover to look at for your life insurance requirements in this example.